Glad to know you're still with us. The Monetary Policy Committee of the Central Bank of Nigeria is set to convene its final meeting of the year today, November 26, 2024, with inflation surging to a 17-year high. An economy grappling with various challenges, market participants eagerly await the MPC's decision on interest rates. Analysts continue to price in a modest hike, but what are the key factors that will influence the MPC's decision? And what will be the potential impact of a rate hike on the economy? Well, Dr. Oluwanbepelumi Olanubi, economic consultant and co-founder, Kingsgate Advisors Institute, joins me for more on this. Thank you so much for joining me today.
Thank you for having me. Good morning.
Good morning to you too. Well, it doesn't seem anyone is expecting a rate cut. So the question will be, by how many basis points are you expecting this hike to be?
Right. I don't think the market or even analysts are expecting any rate cut at the moment, given the trajectory of inflation that we have seen. So typically, I'm expecting them to increase the monetary policy rate by 25 to 50 basis points. Reason because, of course, CBN or the MPC have already said it, and they are clear as to their hawkish stance as to combating or reining in inflation. And we saw inflation actually came down, between July, August, and we saw it also taking the upward trend again in September, and that we saw in October. And I'm sure CBN would want to consider this upward trend again. So that's why they might want to raise it by 25 to 50 basis points. And given the fact that inflation has been stubborn, really, some of the factors that contributed to this increase that you're seeing is the consistent hike, in PMS price, the flooding that happened, that also has a role to play, in terms of logistics cost, and of course the general insecurities that we've seen. These are the factors that are still weighing in on inflation numbers, and that's why we are still seeing this upward trajectory. So we expect CBN to still raise interest rates probably by 25 to 50 basis points.
Well, you might as well add the exchange rate, because we're seeing that also pricing, we're seeing the influence actually even on inflation, and of course prices of things, goods and services, which then gets to affect inflation.
Absolutely. Nigeria as a country, we are more import dependent, is sadly so. And given that the naira has weakened, a couple of weeks now, we've seen the naira weakening in parallel markets. This also is one of the issues that we're looking at, and this affects imported prices of goods and services. This affects cost of production. This affects the business owners. They've definitely priced this in and transferred the cost to the market, to the we call it the consumers. And this, of course, will affect both the headline inflation and even the core inflation, given the logistics dynamics that we mentioned.
I like what you said now, talking about the headline inflation and core inflation, because we've seen 850 basis point hikes so far and the change in other parameters. Yet, we're seeing headline inflation spiraling. We're seeing core inflation, which of course has been stubborn, remaining stubborn. And the food inflation, which we thought was getting better, we're seeing it also, go up and all of those things. What does this say about the tools that are being used by the Monetary Policy Committee? Are they actually working? Why are those things not, why are we not seeing changes?
Right. A lot of analysts have actually said, and I've had opportunity to say this also in some conversations I've had earlier, that the transmission mechanism between the interest rate and inflation rate in Nigeria is actually very weak. And this is because of the dynamics and the nature of the inflation that we are seeing in the country. The CBN needs to rethink their method and their tools. Now, let's take what a typical economic would look like. A typical economic, take for instance, advanced economic like the United States, where they are very heavy on credit card system, where their mortgage, their businesses, everything is linked to the credit card. So what we say is that what the CBN, or sorry, the central bank does, the Fed does, is when they realize that there's too much money in circulation, what we call money supply saturation, they try to increase the interest rate. And when they do that, because let me take you to the classroom, the equation will tell you that output, or what I call income, is a function of consumption and savings. So when they increase interest rate, what happens? The marginal propensity to save, the willingness to save increases, because you think, let me save so I can have more in the future rather than consuming it today. So when you save more, consumption reduces. When consumption reduces, what happens? Eventually, aggregate demand falls, and that has an impact on prices. Then you start seeing inflation trending downwards, and that's when you have that impact. But for Nigeria, the factors is actually not.
I wanted to say there's nothing to say, actually. There's nothing to say.
They are more structural and supply related than demand. So that's why we're not seeing the impact on the inflation as it should. Analysts have said, even the IMF has said it, that the central bank needs to rethink its tools and see how more effective we can rein in inflation. Because, like you rightly said, inflation, headline inflation, core inflation, they are stubbornly high. And we need to put all the tools possible, to see that we have this. And I'll give you an instance what the central bank can actually do. For instance, now, we can actually encourage what we call a single-digit interest rate for critical sectors in the economy. And this is possible by interventions in some of these major critical sector. We've seen them do that with some of the manufacturing sector, but more has to be done. That's from more has to be done. And also from the fiscal space, we need to see more rollout of interventions as well.
But the CBN says it wants to remain orthodox.
Yes.
It's saying that it's not going into development financing like it used to. It wants to just stay targeting inflation. So
it's just typical. It's just typical when you're doing the same thing and you are expecting to see a different result. You can't keep doing the same thing and expect to see a different result. While I admit that the interest rate hike has had to measure impact on reining in inflation, but it is not enough. It's telling on businesses, it's telling on economic activities, it's telling on unemployment numbers, it's telling on my pocket, it's telling on yours, right? So we need to actually rethink our strategy. Instead of holding on into orthodoxy, we can actually see a way of, as much as we're trying to rein in inflation, let's drive economic activities as well.
Talking about driving economic activities, I just want to say, looking at the economy, what has been the impact of this 850 basis point hike so far for consumers, for businesses?
You would agree with me that private investment has crowded out because of this interest rate hike. Access to finance. There is no access to finance, and even the cost of finance has increased significantly. This has impacted on businesses. According to the Manufacturers Association of Nigeria, MAN, they said over 750 businesses has closed this year just because they cannot keep up with the cost of production. Overhead costs in terms of logistics, in terms of electricity, or what I would call energy cost, be it electricity, be it PMS, the price has, in fact, doubled, is not like 500% increase, and they have to bear this cost and also transfer some of this cost to the consumer, final consumer. That is why you see inflation numbers.
I'm just wondering again, shouldn't the federal government have targeted some of these things? I said targeted, spaced some of these things really, rather than have all of these things happen together. These reforms actually, don't you think maybe we need to begin to maybe soften some of these reforms?
So the issue is not so much as what reforms the government has taken, it is the timing and the sequencing. It is very important.
That was what I was waiting for.
The timing and the sequencing is very important, especially the impact. Before you carry out any reforms, typically as is done in all economy in the world, you have to do your study first and see the impact. You must have done your macroeconomic stability studies and see your impact. What will be the impact on household, on businesses, even on government itself, on exporters, importers, on trading partners, and you try to check the impact. That will inform how you sequence reform. We understand that it is important we do take all these reforms. Subsidy ought to have gone a long time ago, and we cannot deny that subsidy is eating up into the government's balance sheet, and it has to be. But the fact that we are doing that at a time where production is actually low, critical sectors are struggling, and you are liberalizing the exchange rate market at the same time, will definitely have impact on the grassroots. And energy cost is there, the regulation, PIA sign is low, and all that. Another thing is, if you are going to do this kind of reform, there should be a form of subsidy or a form of relief, social packages, relief that you can help to
they've been talking about some.
The quantity is not enough, the volume is not enough, the size is not enough. Okay, I had an entrepreneur talking recently, and she was emphasizing the fact that the government has been coming out to say, we are doing this, we are doing that. They are not seeing the impact. They are the entrepreneurs. They are the ones doing the businesses. It's not reaching them. Then who is it reaching? That means that targeting is poor. The way the government targets the right people for these interventions is actually poor. And we need to also rethink our targeting strategies. And also we need to create more awareness. So some of these people that need these interventions are not even aware that such programs are available. So we need to do more, really. We need to do more so we can see the positive outcomes that we really desire to see.
Talking about positive outcomes, when you see the GDP number and you see the unemployment number, you think maybe there is progress, maybe progress is actually being made. What do you think about that?
Any GDP number that does not translate into improvement in livelihood, improvement in standard of living, is actually not inclusive and it is not sustainable. Let's look at the GDP number that came out yesterday. You will see that, as usual, service sector is actually the main driver. And service sector is rather capital intensive than labor intensive, meaning that it is employment unelastic. It doesn't generate more employment, but it consumes more capital. So because of that, we don't see the impact on lives. We don't see people getting more employed. What we need to do is more investment in critical sectors that will drive employment, that will drive economic activities, that will drive production, that will increase our productive capacity, that at least we get to our potential GDP, our potential productive capacity, that's the word, that we get to that potential productive capacity and we can begin to see the double digits, or at least we see the 6%, 7% growth rate that we want. Like I said, any growth rate that is not inclusive is not sustainable. And what we are clamoring for is a sustainable, an inclusive and a sustainable growth rate.
So people really want to understand what this inclusive growth rate
inclusive growth rate simply means that a growth rate that touches on every sector, every aspect of the economy, household, businesses, from the mining sector to the extractive sector, to the what they call it, the industrial sector, manufacturing sector, even education services sector, financial services, all sectors, important sectors in the economy, and also generate employment.
But the unemployment figure looks, positive.
It depends on the methodology, right? There have been a lot of discussions around that, and I'm sure that's not even the topic for today. There have been a lot of discussions around how we measure unemployment, and the revision we had 2022 to because the NBS actually revised how they measure unemployment to be in alignment with what ILO, what they suggest in the global space, and that actually affects the unemployment number. But you will agree with me that unemployment in Nigeria is very high. Even the report says that youth unemployment is as high as probably 28%, if I'm not missing the numbers, in the country. So it shows that, and underemployment is another thing. Underemployment is a major thing. According to the way the employment, the statistics is, the methodology, it captures someone that works an hour in a week as employed.
How?
How is that person employed? So we need to actually look at these things, and fine, we need to still, as a country, we need to be at par with international standard and best practices, but we need to also tell ourselves the truth. Unemployment rate is high. Productive capacity is very weak. Growth rate of 3.45% is still very fragile. Despite the fact that it's driven by service sector, it is still very fragile.
All right, I'd like us to close on this. Let's come to the forex market now. We're seeing improvement in market liquidity, and then the naira has remained under pressure. So far in November, the naira traded within a broader range of 1,685 to 1,707. Does this point to ineffective CBN policies, or is it the transmission that is the issue? Because on the one hand, we're actually having these monies coming, but there's no transmission. It's not reflecting on, the value of the naira.
That's the same thing we are talking about. As long as the fundamentals are still the same, we'll still have the same output or the same economic reality. The supply-demand gap for FX, this pressure is still there, it's still very high. This is towards the end of the year. There is regular demand from investors and even importers to import raw material. The demand is there. There is demand for end-of-the-year travels. For those that would have to travel from the country outside, the demand is there. Saving up for tuition fee in January, for those paying tuition fee in foreign currency, the demand is also there. And also for businesses and individuals that are trying to have what we call a safe haven for their money, store of value. Money is the first store of value, right? So in order to just save or store value, they are also demanding for FX just to have a sense of safe haven. But on the supply side, although we have seen production ramp up from the oil sector, remember, oil production is the major source of forex into the economy. We have seen the production ramp up, but we are still not producing at our capacity of 2.2 to 2.3 million barrels per day. We are still producing at 1.4, if you look at the 1.4 million barrels per day, which is still lower than the 1.8 that at least we can still do. That's on one side. The second side is, given the reforms that we've seen, we expect to see more inflow of portfolio investment inflow. We have not seen that size that would help us stabilize the naira.
But that is actually coming in.
It is not enough to stabilize naira, and also intervention from the central bank. We've seen central bank intervene into the market at times, but the frequency, nobody can even predict when they would, and even the size is slow. The frequency is unpredictable. The size is small, the pace is slow, even from both in the official market and even for the sale of forex to the BDCs. So these are the issues that are actually causing this pressure on the naira. And also, the CBN
30 seconds.
All right.
Okay.
The CBN governor also noted that they want to build buffers, given that there might be some shocks, especially global shocks next year. So they are raising, you see the foreign reserve, it has increased and it's that $40 billion threshold. So they're actually trying to save up and increase their forex accretion. And they'll prioritize that over defending and the naira, especially the fact that they've said, okay, they're going through orthodox method and traditional central banking principles.
Thank you so much. I love this wonderful, I mean, it's been a wonderful conversation. Thank you so much,
Thank you so much for having me.
Oluwanbepelumi Olanubi.
Thank you.
It's a pleasure speaking with you.